The ins and outs of investing can leave just about anyone scratching their head. Symbols and numbers scrolling across the ticker can look like hieroglyphics to the average Joe. And these are just the basics of Wall Street. So when it comes to more complex subjects like hedge funds, even the experienced investor may not have total understanding of what exactly a hedge fund is.
Hedge funds are probably best understood when you compare them to mutual funds, which are investment vehicles that a lot of investors use. So in a mutual fund, it has a legal structure that limits the professional investment manager into a very tight category of what he can do and how he can do it. In a hedge fund structure, it's much broader than that. So you also have a professional investment manager, but their mandate is much broader, allowing them to invest in many different instruments over different times. They can both buy them, they can sell them. So the strategies and the implementation give an investor and the professional investment manager a much broader ability to make money. By hedging a portfolio, you often can reduce the volatility of that portfolio. Most investors rely on just buying an instrument and waiting for the price to go up. A hedge fund manager can benefit from both buying and selling instruments, waiting for the price to go up or the price to go down. So this broad diversification is beneficial. If you invest in hedge funds in a fund-to-fund, you have an added layer of benefits. They include the fact that professionals that have been selecting hedge fund managers for many, many years now do extensive due diligence on the managers, both on the investment side and the operation and due diligence side, and also make the buy-sell decisions on the actual managers and strategies.
Roxanne Martino is the president and CEO of Aurora Investment Management, which began managing multi-strategy portfolios of hedge funds for individuals and institutions in 1988. Roxanne feels that over the long term, prudent investment in hedge funds can prove to be a critical component of a well-structured portfolio, offering opportunities to outperform most traditional benchmarks, often with lower volatility and better preservation of capital.
Aurora Investment Management is committed to being a premier investment firm focusing on delivering consistently superior investment results, but within a collegial environment that encourages a culture of excellence, respect, teamwork, and integrity. We're always focused on the quality of what we're doing. We want to be excellent stewards of capital for our investors, and we seek to do extensive due diligence on the hedge fund managers that we're going to put in portfolios for our investors. An investor benefits from a portfolio of hedge funds in many ways. Certainly, you can really access some of the best investment minds that exist in the globe. Then you're giving that talent the ability to stretch, to look at strategies and instruments in which they can make money. So there's a lot of flexibility that's provided to them. Also, they're incented to succeed. One of the negatives people use is the fees associated with hedge funds, but in reality, this percentage of profits fee is good. It incents them to have profits.
By diversifying and applying strong due diligence to invest in a portfolio of hedge funds, an investor should be able to produce three desired outcomes: solid risk-adjusted rates of return, relative low volatility compared to equities markets, and low correlation to the direction of equities and bond markets.
Our experience has been that hedge funds do provide a very differentiated return stream for their investors. Managers focus on generating absolute returns for their investors, which means that they're very opportunistic. They're looking to limit the downside and their exposure to markets, especially when markets become more chaotic. And as they examine the landscape, they can identify very attractive risk-return opportunities for their investors' portfolios.
In addition to focusing on long-term results, an investor should choose their money manager wisely. Be on the lookout for funds run by experienced managers who have lived through many different markets and credit cycles and which invest in market-neutral strategies. These tactics can provide qualified investors with relatively low volatility returns over extended periods of time.
Hedge funds provide a very differentiated return stream. so that when you add a component of hedge funds, a well-diversified component of hedge funds, to a traditional portfolio, you end up with a risk-return profile that most people find attractive. You're elevating the return, the expected return of the portfolio, and you're decreasing substantially the volatility of that portfolio, so that you end up with a return stream that has a very good risk-return profile.
One of the common misconceptions in the hedge fund industry is that there are many irresponsible hedge funds, and certainly we often hear about those. But as in any industry, there's the good and the bad. Our job is to find the hedge fund managers that execute their trading strategies appropriately, that have the appropriate amount of risk, and that are very responsible, great stewards of capital.
A well-diversified portfolio of hedge funds ought to be an essential component of anyone's portfolio. If you think about what a hedge fund is, it's a pooled vehicle that's dedicated to generating positive returns no matter what's happening in the market. And if you collect a group of very high qualified, highly talented managers, all of whom are focused on generating positive returns, then I think you've created a really powerful vehicle for the long-term allocation of capital.
Investors should look at a diversified portfolio of hedge funds as a benefit to their overall portfolio allocation. It provides diversification. And certainly when you're looking at executing something like this, look at firms that have expertise, that have a proven track record over many market cycles. It can be a real benefit to someone's portfolio.
Hedge funds may well be the most misunderstood sector in the world of finance, but qualified investors who take the time to study this investment alternative may uncover suitable and attractive opportunities for a portion of their portfolios.